you for being here to learn more about the CARES Act, which was signed into law by the President on March 27, 2020. A couple of housekeeping items. The material appearing in this presentation is for informational purposes only and should not be construed as advice of any kind, including, without limitation, legal, accounting, or investment advice. My name is MaryCaitlin Willcuts. I am a manager in the Credits and Incentives group and work on hiring and wage-based tax credits and lead the Max Credits platform for the firm. I am going to be speaking about the Employee Retention Tax Credits. As part of the CARES Act, beginning March 12, 2020, eligible employers are entitled to a tax credit used to offset their FICA taxes, and any excess credit can be refunded to the employer. The credit can be up to $5,000 per employee for a qualified employer. To qualify, businesses must have experienced either of the following: a partial or full suspension of operations due to governmental orders that limited commerce, travel, or group meetings due to COVID-19, or experience a significant decline in gross receipts. In determining significant decline, it begins with the period in which gross receipts are less than 50% of the gross receipts of the same prior calendar year quarter and ends with the quarter where gross receipts are 80% of the gross receipts for the same prior calendar quarter. The credit available is 50% of the first $10,000 of wages per eligible employee. The credit offsets FICA taxes due, and any excess credit is refundable. And eligible wages include regular wages paid plus health plan expenses allocable to the qualified wages under an employer-sponsored plan. In determining which employees the employer can calculate wages on, businesses with 100 or less full-time employees, the credit is based on wages paid to all employees, regardless of whether they are performing services. And for businesses with greater than 100 full-time employees, the credit is based only on wages paid to employees who are not providing services due to COVID-19. So for example, employees working from home would not be eligible. However, we are now hearing that amended guidelines will be issued by the IRS, allowing employers with 100 or more employees to claim a new tax credit for employees who are working only part-time as a result of COVID-19. Some additional considerations: tax-exempt employers are eligible for the credit. The IRS has also released Form 7200 to be used to file COVID-19 related refund claims. The same wages cannot be used to calculate both the Employee Retention Credit and the Work Opportunity Tax Credit. And the retention credit cannot be used in conjunction with the Paycheck Protection Program loans or the paid sick and family leave credit. If you have any questions, please feel free to reach out to me at the contact information on your screen or to Rob O'Neill, who leads the firm on these types of credits.